Let's move on. We've got the management of CG Power joining in. It's been a very good performance from the company. Revenues are up 13%, EBITDA is up 38%, margins have expanded almost 300 basis points, and order intake is looking pretty healthy as well. Mr. Natarajan Srinivasan is Managing Director and CEO at CG Power. He's joining us to take some questions. Mr. Natarajan, good morning. Great to have you with us here. Thanks very much for your time. The power segment especially has seen a significant uptick in terms of order intake. Can we start there? I mean, is that segment looking very buoyant? What are your expectations for inflows for the full year in this segment?
I think the power segment, as of now, the order book, unexecuted order book, is about 2,820 crores, of which the transformer is actually about 1,730 crores. As I mentioned earlier, there is a significant investment which is going into the power sector. For demand for both for switchgear and transformer will continue to be high, and not only for us, I think for all the players. We have capacity constraints to take more. This will take about 12 to 14 months to execute. But order flow is strong, and then inquiry is more than 10,000 crores.
Inquiry is more than 10,000 crores, which means potential projects which may be put together. Okay, deal pipeline.
Deal pipeline, yeah.
And you said you have that's a good problem to have, constraints to take in more orders. So how does that get resolved? I mean, in terms of capacity expansion, etc.
So we have already announced an expansion whereby our capacity in the power transformer will go from 17,000 MVA to 25,000 MVA. But even that will not be adequate. We are looking to see whether we can look at some acquisitions. I mean, opportunities are available.
Okay. Sir, you mentioned that there are order inquiries to the extent of almost 10,000 crores. Is this more on the power side, or are you also factoring in all the industrial orders that you're getting? And give us a sense between power and industrial, where do you see sort of a bigger buzz and heightened activity, ordering activity?
No, the number I mentioned is only on transformer and switchgear, substantially relatable to the power business.
Power. Okay.
It could be renewables. It could be renewables or solar, or even fossil fuel. All these put together.
Okay, so power is looking very good. You have lots of inquiries lined up. Give us a sense on ordering on the industrial side, because even that business, I mean, in terms of revenue, even that business has seen a decent growth, and that's the lion's share of your revenue right now. So what are the different industrial clusters telling you? What's the outlook for the rest of the year?
So you are talking about industrial segment?
Yeah.
So industrial segment, we report to both railways and motors, and motors are expected to grow in double digits, and almost all the segments, no individual particular industry is actually having a concentration. Water, sugar, ethanol, infrastructure, all are actually firing. So each one probably is growing about 78%.
Okay. All right. Hi, good morning, Mr. Srinivasan. Two-part question I wanted to ask you. Railways, there's obviously a big push out there and a great potential as well. So as a percentage of your business, what is it and where is that headed? And since we just spoke about motors, LT, HT motors as well, what is your market share and have you gained out there?
So in railways, actually, we do about close to about 1,000 to 1,200 crores annually. And there are opportunities, huge opportunities in railways, but on the project side, primarily in the upgradation of locos and Vande Bharat trains, etc. So those areas, unless we are able to tie up with a player who has got the experience and eligibility criteria, we will not be able to directly participate. But we are also looking at opportunities whether for some subcontracting jobs in respect of those who already have got some orders. So this year also there are some orders are likely on the Vande Bharat side. We are talking to some people. But as of now, nothing has been formed up, so we are not able to see anything more. So coming to your second question on HT motors, that is what we call industrial motors. Our market share is about 16%, whereas in the LT motors, our market share is about 35%. LT Motors is growing. There again, we have some capacity constraints. We are taking some steps to expand the capacity. I see our market share probably from here onwards to move to about another 3-4% by end of this year.
In which segments, sir? In both the segments, or
in LT Motors, I think we are 35%. That will continue to retain that share. In the HT Motors, from 16%, probably we can move up to 20%.
Okay. And just to go back to that earlier point in switchgear and transformers, you said capacity expansion is on track, but that won't be enough. You'll look at some acquisitions, etc. Anything we should expect soon, sir?
So not really, I think, because as of now, nothing is firmed up, but we are constantly on the lookout.
Okay. This is largely going to be in the unlisted space? Smaller capacities?
No, everything is open. So we get some proposals every now and then, but as and when it's finalized, probably I'll be able to
You want to tell us about the size?
No, nothing is formed up. I cannot say anything.
Mr. Srinivasan, you can tease us a little bit.
I think he is teasing.
Yeah, we know you're on the prowl. Just tell us the size. What is the size of the acquisition?
No. Everyone will be interested today because the industry has got so much of demand. So it will be a lot of competition. We have to wait and see.
But it's 100, 200, 500 crores, more than that?
Don't ask me anything more. I'm sorry to say.
I tried my best.
Okay. So, last time, I think, on the last call after the last quarter Q4 earnings, you had said that margins will be at around 14% for this year. Now, considering the strength in the business, and as you mentioned that, the ordering activity has really picked up, do you think there's a scope to improve that margin guidance at all? And also just tell us about the expectation on order book growth on both sides, power as well as industrial. If you could give us a number of the order book growth that you'll see on both sides.
So as first as regards margins, 70% of the cost of production is way of material cost. We have mainly copper, iron, steel, aluminium. So I think if these prices move, definitely we will not be able to maintain margins. So as of now, we are not expecting any significant volatility in these prices. There is volatility, but it will not be, as of now, it is maybe controllable or manageable. Therefore, we will be able to maintain this margin. Beyond this, I'm not sure whether we'll be able to increase the margin because, these are all tender-driven business. Railways is tender-driven, power sector is tender-driven. Therefore, you have to compete and get the order. As far as motorists is concerned, the kind of competition from very large players. So there is very little scope for you to increase the selling price the way you want. Therefore, I would be happy to maintain this margin at this level. Coming to order book, as of last year, 30th June of last year, was aggregate order book was 3,500 crores. It has grown by about 40%. As of this June 2023, I think order book is close to 5,000 crores, 4,909 crores to be exact. And the inquiry is further strong. So therefore, I don't see any problem in order book. It's a question of execution.
Okay, all right. Final question then, sir, before we let you go. For the year, for the entire business, margins you're going to maintain, what kind of growth are you looking at? And a couple of sell-side notes, they are highlighting that exports could be big potential. Currently, it's not too large. So could you tell us about that? Do you see a large potential? Do you have a ballpark number for exports in mind?
See, for the year as a whole, as I maintained last year, our targeting to go about 15%. And this quarter, actually, we lost about 40-45 crores of sales due to our internal, also some cyclone effect, etc. Otherwise, target is to maintain grow the top line by 15% for this year, I think. So given the order book is definitely there. So if we execute, definitely we will able to reach that. As regards your second question, exports, unless and until the domestic demand is so strong, unless and until you have a sufficient capacity, we will not be able to go big on exports. All the segments, three segments, actually the domestic segment is very demand is strong. We are struggling to meet the demand domestically. While we are taking steps to seize the market and then pick up upon dealers, customers, etc. When we probably our capacity expanded capacity comes into force, that we will be able to affect maybe next year and year after.
Mr. Natarajan, it's a pleasure always speaking with you, sir, and we look forward to having you back on soon, and of course around the time that you announce that acquisition as well, whenever that is. Thank you very much for joining us here on CNBC TV 18. Thank you.